Up next, we have Adem Becirevic, CEO of Virtual Financial.
Have you ever felt financially challenged? Or do you know someone who has felt financially challenged? At Virtual Financial, it's our goal and our mission to make financial advice affordable for all Australians. You know, what keeps you up at night? You know, a lot of our clients come to us and they tell us it's financial pressures. You know, so for us, it's all about trying to help Australians in the financial market. Do a click. There we go. Oh, shit. So just a bit about myself. Currently in Brisbane. I actually grew up in Melbourne. I'm a CPA qualified accountant, but I decided to specialise in financial advice. Sport-wise, I love all sport. I love AFL. I've highly killed in the AFL. Last month I ran my first marathon. Yeah, that was very, very challenging. But that's a bit about myself, and I'm very passionate about financial advice. Why us? Basically, we're a high-profit, low-risk investment. So we're not a startup. I'm the founding partner of Spectrum Financial, now the founding partner of Virtual Financial. We've been in the industry for over 20 years. Clients need our core offering. We have the opportunity for us to grow the market by acquisition with what's actually happening in the market today. There's been no better time in the financial industry world to do what we're going to do today. The Royal Commission has created a lot of barriers in financial advice. Basically, in the financial services world, with all the changes, there has been some good and there's been some bad, but we've gone from 28,000 advisors up here down to 16,000 advisors. So that's certainly not great for people that are out there to get financial advice, but it certainly gives us companies like ourselves that can actually get this done right great opportunities. We believe with what we're going to do, we're going to grow with acquisitions over the next 3 to 5 years, and we're looking to list on the ASX in 3 to 5 years. With potentially $1 should hopefully return 4 to 5 times, plus dividends along the way. So as I said before, the Royal Commission has really put a big dampener on our industry, with the advisor numbers really, really dropping, and also compliance has been really constrictive in this area. So only bigger firms are going to last going forward. The future of financial advice. Well, as we know, banks have actually exited financial advice. So banks are no longer, if you go to Macquarie Bank or Westpac or any of these big banks, unless you've got $1 million in the bank, they don't want to know you. So like, you know, this is Wholesale Investor Conference today. They're only after sophisticated wholesale investors, $1 million plus. So they're not after retail clients. So our market, as well as wholesale clients, but our market is retail clients to help clients that actually need the help up to that $1 million mark. So we see there's a massive opportunity. And how do we do that? We do it with technology. So we use Zoom. We have our own sophisticated software that actually shows our clients how they can invest. So for example, we use questionnaires. We have a 5-minute questionnaire. We have an all about you questionnaire to make it the process simple, where the clients can do this from their home, from work, and more importantly, what we're finding is by being a technology-based financial advice firm, clients now are actually doing this information, they're doing the questionnaires together. So they're at home, and they're actually, or one's at home, one's at work, and they can zoom in and we can do the information all together, which is totally different. So just a typical firm of what we're looking at acquiring. The firms we're looking at acquiring to really help us boost, get to where we want to go is they'll have self-managed fund clients, they'll have clients that have super, they'll have fee for service. So our fee generation is from fee for service. It's also from insurance commissions. We get paid insurance commissions each year. So the great thing about the financial planning industry is that there's an ongoing revenue every month that just ticks in. It's not if, but, or maybe. It just keeps rolling in. Every advisor should be writing somewhere between $250,000 and $350,000 of new business every year. Our model is to get to about 20 advisors. And The EBIT model, we're looking at acquiring about 35%, but we will get economies of scale, and that should hopefully jump up to about 45%. So the journey of the client. So the client, when they come to us, basically, normally they're in a mess. They don't know whether they're on track for retirement. They want to consolidate their super. They want to protect their family with insurances. They want to do a retirement plan. Like, just imagine if, you've got your financial plan done right, and you know how your retirement's going to look. That you're going to be on track. That that when you retire, you can actually jump in that caravan, travel around Australia for 12 months. That you can go overseas to Europe. That that everything's on track. What we find with our clients, once we take them through this journey of financial advice, they say to me, Adam, it's the most refreshing thing for the last 5 or 10 years. I haven't slept at night because I'm just worried about retirement. But what you don't know is what you don't know. And one thing I will suggest to everyone is that you have to get professional advice, because it's not only your money that we're going to use in regards to what we're doing, we're also going to use the government money. But if you get the right advice for our clients, we can show our clients how they can retire really comfortably. Why now? Well, obviously, as I said before, there's been over 12,000 advisors going to leave the industry. There's going to be, by the end of September, which is just coming up, if you haven't got all your qualifications in place, there's an ASIC, we've got a phase year exam in place, there's thousands of advisors that are going to have to sell their practice. So we are gearing up right now with our capital raise, so we're in a position to buy these practices as they come on board. So, and also, banks, they've exited the market. So it's a low risk model, what we have. It's a low risk model, and it's proven. We've purchased practices before, we've rolled them into so we know what we're doing, we've got the experience, and we know we can make it work. The business model has been proven, and as I said before, it's based on 2 firms. So there's been 2 firms that have done it in the past. There's been Shadforth and Count Financial. Now, they sold their practice, they rolled them up, bought them at 2 times, rolled them up and sold between 12 and 15 times. So you can see, and they did it at the hardest possible time to actually do financial advice. They did it 10, 12 years ago when the banks were in financial advice, when the banks were taking all their clients, when the banks were taking all the financial advisors that were qualified from university. So, like, now has never been a better time to do this. Raising 20 million, with the banks, we've already got in place where we can actually borrow as well. So we're going to be able to roll up $20 million of practices over the next few years. Summary. So just in summary, we're looking to acquire firms at 2 times recurring revenue. Quite simple. We plan to have $1 billion of funds under management in 3 to 5 years' time, if not sooner. We want to generate between $10 to $20 million of ongoing recurring revenue. We're going to have somewhere between 20 and 30 advisors in our group. So it's going to make us a really strong group where we can all look to. So there's a great exit for investors. So they invest now, and they've got the exit in 3 to 5 years when they go to ASX. And look, we're very confident that time's going to change. Everything goes in cycles. So we know that everyone's got short memory. Like, everyone's forgotten about the GFC now, right? Everything goes in cycles, and we know that the banks will come back into financial advice because they know it's going to be, when you've got a practice like ours, $1 billion managed. So we're seeking to raise the 10 million, and as we said before, hopefully we are very confident that we can return 4 to 5 times in 3 to 5 years. Thank you very much. Cheers.